Hi students, today I'm going to teach you how to write journal entries using accounting equation approach or modern approach. Under this approach, accounts are classified into these categories: assets, liabilities, expenses and losses, incomes and gains, capital and drawings. In case of assets, when asset is increasing in the business, that assets account is debited. When any asset is decreasing, then that asset account is credited. In this way, we have to apply all these rules. Let us take an example. Machinery purchased rupees 10,000. In this transaction, we received a machinery and we gave cash. One asset, both are assets here. Machinery is an asset, cash is also asset. One asset is coming, one asset is going. Whatever coming, that is increasing. Whatever is going, that is decreasing. Since machinery is coming, asset is increasing, so machinery account is debited. And cash is going out, that's why cash account is decreased, so cash account is credited. Let's take second example. Machine sold. In machine sold, what we observe, machinery is going out, cash is coming in. Here cash is an asset and it is coming into the business. That's why cash account is to be debited. Here cash account is debited. And machinery is going out, that is also an asset. Since it is going out, it is decreasing in the business. That's why machine account is credited. Third example, loan taken from Ram, rupees 20,000. In this transaction, we received cash. Cash is an asset and it is coming into the business. So cash balance is increasing. That's why cash account is debited. And here one more account is involved, that is loan. Loan is a liability because we have to pay it later. Since it is a liability and it arises out of this transaction, loan account is credited. But you should mention loan from RAM account. Coming to fourth example, loan repaid to RAM. Loan repaid to RAM means cash is going out. Cash is an asset. So, cash account is to be credited. Why? Cash balance is decreasing. So, cash account is credited. At the same time, the loan amount is being reduced because we are repaying it. So, since it is a liability and it is decreasing, loan account should be debited. Loan from RAM account. The same account is repeated. Coming to fifth example, salary is paid. When salary is paid, what is going out? Cash is going out. Cash is an asset. Since it is an asset and it is going out, cash balance is decreasing. Since it is decreasing, it should be credited. Now, that cash is in the form of an expense. It means we are paying salaries, the salary will not come back to us. It is an expense. Any amount which you pay which will not come back is an expense. That's why salary account is debited according to this rule. expenses and losses. Increase in expenses, debit, decrease in expenses, credit. Now coming to rent received. In this transaction, we are receiving some cash. So our cash balance is increasing. Since the cash balance is increasing and it is an asset, cash account is to be debited. At the same time, this rent we are not going to pay it back. It remains with us. That amount is remaining with us. We can keep it and we can use it. That's why it is an income. Since it is an income, according to this rule, increase in income is to be credited. So rent account is credited. Coming to capital introduced. Capital introduced means the proprietor of the business has invested some money into the business. When he invested, some cash is coming into the business. So cash balance is increasing. Since cash is an asset and it is increasing, it is to be debited. So cash account is debited. At the same time, this is a liability to the firm because afterwards the firm has to pay to this proprietor to pay means here return that capital. So it is a liability. So liability is increasing. So capital account is created. In other words, we have separately written a rule here. When capital increase is there, it is to be credited. So clearly the rule says that when capital is introduced, capital account is to be credited. And then cash drawn by the proprietor for personal use. Proprietor is taking some cash from the business and he is using that money for his personal purpose, not for business purpose. Whenever proprietor uses any cash from the business, that amount is to be treated as drawings. So here drawings are erased. When drawings are erased, then drawings account is to be debited. See, increase in drawings. So when arising means it is increasing. So drawings account is to be debited. And at the same time, cash is going out. Since cash is going out, cash balance is decreasing. That's why cash account is credited. In this way, we can make use of these rules. Assets rule, liabilities rule, expenses rule, incomes rule, capital rule, drawings rule. Right. Thank you very much. And in the next class, we will meet.